This is Nightly Business Report with Tyler Matheson and Susie Guerin. Brought to you in part by
TheStreet.com, featuring Herb Greenberg, who reminds investors that risk is real. With Herb Greenberg's Reality Check, researching stocks in terms of risk. You can learn more at TheStreet.com/realitycheck.
Maximum fine. General Motors will pay $35 million, largest penalty possible for the 10-year delay of its ignition switch recall. Is the automaker now in the clear, or are more fines on the way?
Raising the stakes, Warren Buffett, Dan Loeb, John Paulson, some of the world's smartest investors are buying up shares of Verizon. What do they see in this stock that others may not? And
caps on coverage. Some health insurers are trying to make you pay more for your coverage, but the new approach could be hazardous to your wealth. All that and more tonight on Nightly Business Report for Friday, May 16th.
Good evening, everyone. The bad news for General Motors got even worse today. Federal transportation officials slapped the automaker with a $35 million fine, the biggest allowed by law, for failing to act quickly enough to recall millions of cars with faulty ignition switches that were linked to at least 13 crash-related deaths. U.S. Transportation Secretary Anthony Fox says GM broke the law by waiting too long to order that recall, even though it knew about the switch problems.
What we cannot tolerate, what we will never accept, is a person or a company that knows danger exists and says nothing. Literally, silence can kill.
In a statement, General Motors said, quote, "We have learned a great deal from this recall. We will now focus on the goal of becoming an industry leader in safety." Phil LeBeau is with us now with more on General Motors and what else GM has agreed to. Phil, nice to have you here with us. First, let's just talk about that $35 million. It doesn't sound like a whole lot of money for a big company like General Motors. So, once they pay that, are they free and clear, or could they pay more fines?
Oh, there's going to be more fines coming out there. Remember, the DOJ is looking at a criminal probe right now. There's an investigation if there were any criminal laws that were broken. And if there were, you can bet that the fine potentially is going to be well over $1 billion. Could be close to $2 billion, could be beyond that, depending on what they find. So you've got that out there. You've got 2 congressional investigations. And NHTSA, with today's action, is telling General Motors, this is not the end of it. You're going to continue to give us more information, and we want to see more of what you're doing in the future when it comes to safety issues.
To me, there seemed, Phil, to be a little bit of an irony that NHTSA was finding General Motors when NHTSA, the watchdog, it too missed some of the connecting the dots. Are they partly culpable here?
Absolutely. Because NHTSA, as the cop on the beat, probably should have strung together the dots and said, wait a second, we've got an issue long ago. They did 3 separate special crash investigations, and there were other documents that have come out that's shown that they probably should have known more, and yet they didn't. At the end of the day, however, what they're trying to do is, A, say that we're going to be a little bit more forceful with General Motors, and B, try to convince people that they are the watchdog that is out there.
Put this in perspective for us. You're talking about GM and possibly paying $1 billion in other fines. We know that Toyota recently got slapped with some big fines. How does that compare with what GM is going through?
Well, the Toyota fine was the largest ever for an automaker. And let's be clear, General Motors has not been found guilty of any criminal actions here. And it could be that the DOJ looks at this and at the end of the day they say, look, we couldn't find any criminal wrongdoing here. But if there were criminal acts committed here, the Toyota blueprint is out there, and that blueprint is very clear. It says that the federal government will make you pay a stiff fine if you're an automaker for not doing more when it comes to recalls.
All right. Phil, thank you so much. Really great to have you here with us.
Good to be here.
And to read more about the GM recall and the corporate culture at the automaker, go to our website, nbr.com.
Well, after spending most of this Friday hovering around the flat line, the major averages showed a little life in the final hour, halting a 2-day losing streak, with stocks swinging to the upside. But today's gains weren't enough to save the markets from a losing week overall. Here's how Wall Street ended today's session. The Dow up 44, NASDAQ higher by 21, and the S&P added 7. Biggest gainer in the Dow today Verizon, with shares there up more than 2%. That is after regulatory filings showed that a number of billionaire investors increased their ownership stakes in the telecom giant. So, what is it about Verizon that has so many big-name investors going all in on the stock? Dominic Chu has more.
Verizon is now a target for some of America's biggest and best-performing money managers. Yes, that Verizon. It's one of the most eye-catching trades Wall Street's seen in quite some time, and it's in one of the least glitzy industries out there. Verizon is seen by many as a massive, mature company with few big growth prospects. But there are a number of reasons why stocks like Verizon are becoming more attractive.
This is a sector that has sound fundamentals, typically a solid cash flow, low valuations, and high dividend yield. And there's a real need for income today, and it can be found in this space.
That may be what's grabbing Warren Buffett's attention. In the latest round of quarterly regulatory disclosures, Buffett's Berkshire Hathaway reported a brand new stake of 11 million shares in Verizon. That's worth over $500 million at current market prices. But he's not the only one. Hedge fund heavyweights like John Paulson of Paulson & Company, as well as Dan Loeb of Third Point, are also adding larger stakes. Paulson bought 8.7 million shares of the company, and Loeb bought 3.5 million shares. Some experts point to the steady nature of Verizon's business, along with the hefty dividend yield that it offers. Holders of each share of Verizon are entitled to $2.12 in dividend payments each year. That translates into over 4% return just on the dividend alone.
Dividend-paying stocks are the sweet spot, and amongst those are some really good telecom names that offer what baby boomers need today, which is income in retirement as well as capital appreciation.
Of course, there's always a risk that the stock can go down. Now, maybe it's a longer-term play or just a shorter-term trade, but the dividend seems to be a big part of the reason why the stock is so attractive to these Wall Street heavyweights. For Nightly Business Report, I'm Dominic Chu.
Turning now to the housing market, there was a surge in new home construction in the month of April. Housing starts rose 13% month to month, but that volume was driven almost entirely by multi-family units, while construction of single-family homes continues to struggle. So is this good news for housing? Diana Olick takes a look.
We've had a really difficult spring.
Maryland home builder Stephen Paul says despite a lot of optimism last year, demand for his new homes this year is just not showing up.
We're not seeing that demand. I wish that I was seeing it. We are seeing a change, in policy where you're seeing more townhouses being brought to the market for development and less single family. But the traditional single family market is very slow.
And that's why the numbers are so drastically different. Single-family starts were up barely 1% month to month, while multifamily were up nearly 43%. Building permits, a gauge of future demand, were even worse for single-family. Permits up barely 1% month to month and down over 3% from a year ago. Multifamily apartment demand is still very strong. Vacancies still falling, rents still rising, and that's why you're seeing developers put up so many new buildings. But some argue that could all change very soon.
We actually did a consumer survey recently of over 3,000 adults in the country, and we asked those that are married, live in an apartment, why they live there. And the least selected answer was single-family home's a bad investment.
At a realtor conference in Washington this week, agents said the biggest barrier to recovery wasn't lack of demand, but lack of homes for sale.
It's hard to kind of argue that supply brings demand, but in a market where there's a lack of inventory, there's a lack of excitement.
Back in Maryland, Stephen Paul says he will turn to more multifamily townhomes, which are generally more affordable.
In the next 2 years, half of all the homes I build will be townhomes, as opposed to right now it's 100% single family.
With single-family home prices still rising, that is where he sees demand heading. For Nightly Business Report, I'm Diana Olick in Washington.
Demand for health care coverage always seems to be rising, along with health care costs. And now some insurance plans are setting limits on what they will pay for certain medical procedures. Coverage caps that could end up costing you more money. Bertha Coombs has more.
CalPERS, the California Public Employees Retirement System, was fed up with paying wildly different prices for the same medical services.
one hospital could be charging us $15,000 and another hospital, True Number, was charging us about $100,000 for the same procedure, for the same length of stay, for the same quality outcomes. That's what drove us to take a broader look at this and say, what can we do to standardize that?
So CalPERS took a bold step. They set a limit of $30,000 for a knee replacement and told members where they'd get the best care for that price. The savings the first 2 years, $5.5 million. Members shopped around, and that forced area hospitals to respond.
A lot of the high-priced hospitals reduced their prices. They didn't want to lose these patients. The low-priced hospitals did not reduce their rates. They just stayed where they were.
Under the Affordable Care Act, health plans can't set spending caps when it comes to overall coverage. But the Obama administration earlier this month said that CalPERS and other plans will be allowed to set spending caps for individual procedures, at least for now.
For standard procedures like knee replacements and colonoscopies, price limits are a good tool to help bring costs down, says Berkeley professor James Robinson.
They'll try to make sure that you can go to a moderate-priced provider, and if you want to go to the more expensive one, that's your right. We're not stopping that. We're just saying you have to pay the difference yourself.
But it only works when there's an emphasis on quality care, says CalPERS Ann Boynton.
I think the danger is a purchaser might be inclined to implement a program like this, but not have all of the appropriate support systems in place that make it work for the patient.
The Obama administration will issue a final rule on price limits later this year. Bertha Coombs, Nightly Business Report.
Joining us now to talk more about all of this, Craig Garthwaite. He is an assistant professor of management at Northwestern's Kellogg School of Management. His specialty is healthcare. Craig, nice to have you back with us. You know, I don't think too many people would argue that we want to get our healthcare costs down, and this is one strategy to do it. But are we at risk here of getting low prices, but also coming with it low quality care? What about quality care?
So I think the representative from CalPERS was perfectly correct on that this only works if you give the patient enough information to pick the right hospital that offers a quality, and you set the price at a point that there are a number of high-quality providers. And let's be clear, you can do that. There's such dispersion in the prices paid across hospitals that there's lots of places you can get these relatively routine procedures like a knee replacement at a lower cost than you might currently be paying.
But where do you get if you can access the cost information, where can you get the information on quality? How long a person took to recover, the incidence of infection, the incidence of complications and things like that?
Yeah, it's going to be incumbent upon the insurers that want to implement this reference pricing scheme to give that information to their customers. And that's only going to come through the insurer and through us having a really good sense of what quality means in this setting. So infections after surgery are one case, but also you want to think about if you're getting your knee or your hip replaced, how long does it take for you to get back to pain-free daily living, the goal of that? And those types of patient-reported outcomes are things that we're going to have to include in this system.
You know, Craig, it's very difficult and confusing for many people to understand the current healthcare system, and now we're adding on all these new rules and terms and policies. You know, talk us through about what kind of education we're going to need for consumers, the patients, in all of this, so that they do well. We've seen in the financial education area, a lot of people still don't understand how a 401k works, and that's been around for a long time.
Yeah, no, it's hard. You know, we say many economists can't really understand the healthcare system either, so it's quite difficult. But I think the goal here is to pick a set of relatively self-contained procedures and provide people with tangible ideas of what quality is in this setting. So I think we can understand things like how many more infections do your patients have than others, how fast do your patients get back to being able to have pain-free living than other people, and those are the types of outcomes we want to look at, and I think there's going to be a lot of effort over the next few years, keeping in mind that patients will always have the option to not buy one of these insurance plans. There's going to be a trade-off here. You're going to choose, do I want to pay a high premium and have lots of flexibility and no reference pricing, or do I want to have a low premium and I'm going to be forced to shop around a bit to be able to get the best price? This is the choice we're going to face on the exchanges as we try and control healthcare spending.
As a matter of sort of pricing theory, Craig, you know, when a third party is paying for something, you don't care very much what the price is, what the cost is. This seems to be driving at the idea that I, the insurer, I'm going to make you the ultimate user very aware of what the cost is, and you're going to have to bear more of that cost. Is that potentially a good thing in terms of bringing the market to bear to bring prices and costs down?
We certainly want to have a little bit more of a situation where the patient is responding to price signals within healthcare. And so we want to do that. We want to do it in a way in which the patient can make an informed decision. And that's why we want to do it and pick these types of relatively self-contained procedures. We don't want sort of people to pick their care coordinator for type 2 diabetes based ultimately only on price, because we don't think patients have enough information for that. But we can identify a set of procedures like an MRI, like a colonoscopy, which we think are relatively self-contained episodes, and patients can shop on price. And that really is the only way we're going to solve a lot of our healthcare spending. It's in some ways a simple problem. We need to either consume less healthcare or pay less for the healthcare we consume. And this is one attempt to get at the price question.
Boy, it's a whole new landscape. A lot to learn here. Craig, thanks so much for explaining part of it to us. We really appreciate it.
Thank you.
Craig Garthwaite, he's Northwestern's Kellogg School of Management professor.
And still ahead, the case for mid-cap stocks from a market monitor who'll name names and give you the numbers. But first, India elected a new prime minister in a landslide victory, sweeping the long-dominant Congress party from power in the world's largest democracy. Hindu nationalist Narendra Modi has promised a revival of economic growth with more foreign investment and a stronger fiscal partnership with the U.S., sending its benchmark index to record highs.
Golden Gate Capital reels in Red Lobster from Darden, and that's where we begin tonight's market focus. Darden, the restaurant operator, has agreed to sell the chain for more than $2 billion in cash, going against pressure from activist investor Starboard Value that opposed the sale. Other investors didn't seem to like the news either. Shares fell more than 4% to $48.49. Another drug merger in the news today. Abbott Laboratories is paying nearly $3 billion for Chile's CFR Pharmaceuticals. The deal would expand Abbott's presence in Latin America and more than double its branded generics drug business in that region. But shares of Abbott fell slightly to $39.06. Shares of World Wrestling Entertainment got slammed today. The company said its new online network won't make up for lost pay-per-view and streaming video on demand business until 2015. The stock plunged almost 44% to $11.27.
Dillard's posted earnings that trumped Wall Street's estimates. The apparel, cosmetics, and home furnishings retailer did post revenue that came up a bit short, but that didn't seem to bother investors. Shares jumped almost 15%. To $111 even. Pfizer will submit a new drug application with the FDA for its breast cancer drug early in the third quarter of this year. That means the drug maker won't have to do bigger, expensive, late-stage testing for approval of the treatment. Shares there up slightly, $29.12 the close. TrueCar had a successful market debut. Even after its initial public offering was priced at $9 a share, and that was well below the expected level. The company, which operates TrueCar.com, an online car shopping and research site, raised about $70 million from the sale of its shares, and the stock closed at $10.06, up almost 12%.
Valuations on a pair of tech startups are raising some eyebrows. Uber Technologies, this is the mobile taxi cab app, is in the process of raising hundreds of millions of dollars, pegging the company with a value of $10 billion. And Pinterest, the online scrapbooking and social media site, just raised another $200 million from investors, putting that company's value at $5 billion.
Our market monitor tonight says that while large cap stocks will do better this year, he has a few mid cappers in mind that will also do well. He's Brian Lazorishak. He's portfolio manager with Chase Investment Counsel. Brian, welcome. Let me get your overall view of the market after this very sort of up and down week.
Yeah, it's certainly been a choppy week. Thanks for having me. We think the market, the weight of the evidence still suggests that the market is in a primary uptrend, although certainly the market's become more selective and you've seen some deterioration beneath the surface. over the last few weeks. That's certainly been notable in the smaller and mid-cap stocks, and some of the more defensive issues outperforming some of the more aggressive or growthier names.
And so, Brian, given this kind of volatility and uncertainty, you were saying, Tyler was just mentioning that you say that the large cap stocks will do well in this market, not as much mid caps, which we know did well last year. Talk us through the difference.
Sure, and the large cap trailed a bit last year, and over the last couple years have really been a better environment for smaller and mid cap stocks, and we're seeing a little bit of that this year in that large cap has done better so far. Some of that's been a flight to safety, some of that's been just a reversion of some of those things that we saw last year. So that could continue for some time, but we still think from a diversification standpoint, there's a place for mid cap or small cap in a portfolio, and I think you just have to be a little more selective in those areas.
First stock you want to name tonight is Skyworks Solutions. Tell us what it does and why you like it.
Sure. Skyworks makes components that connect things is the easiest way to say it. Obviously, that makes a lot of sense for smartphones and tablets, and their business is doing great there, and they're continuing to get more dollar content in smartphones and tablets, so that's a positive. But they're also seeing a trend of connecting other areas of people's lives, things such as healthcare, autos, things around the house getting connected, and as more and more devices become connected to the Internet of Things, that's a huge growth potential for a company like Skyworks. Business is tremendous right now. The stock has had a pretty good move, but the valuation's still attractive.
All right, and here's another company in a completely different field. It's in education, Grand Canyon Education, ticker symbol LOPE, trading at $45. Why do you like this one?
Grand Canyon is, in our opinion, the highest quality stock in the for-profit education space. Grand Canyon is a traditional ground campus university. It's a Christian university based in Phoenix with about 10,000, 11,000 ground students this fall. They are growing tremendously. They're building a second campus out in Phoenix. They think they're going to be, by the start of next school year, at about 18,000 students. So very strong growth. And, they really offer a value proposition. Everybody's been talking about the rising cost of higher education. Their tuition and fees have not been increased in the last 5 years, which is just remarkable if you look around at what's happened everywhere else in that space.
Did you have them in your NCAA bracket, Brian?
I did not have the antelopes, and that's where the ticker symbol comes from in my bracket.
All right, let's go to Mastech, which is your final choice tonight.
Yeah, Mastech is an infrastructure company, so they provide services from everybody from DirecTV and AT&T in terms of residential installation services to bigger projects such as wind, power transmission. If you think about the way people have talked about infrastructure in the United States and the need to upgrade that infrastructure, they're one of the bigger players in that area and stand to benefit from that longer term. Again, very consistent, solid growth story. But very reasonable valuation.
Any disclosures, Brian, about those stocks?
Own all three of those stocks in our funds, but do not own them personally.
All right, Brian Lazorishak with Chase Investment Counsel. Have a great weekend.
Thank you.
Coming up on the program, will the airports be packed, highways bumper to bumper when you hit the road for the upcoming Memorial Day weekend? The answer up next.
And finally tonight, the unofficial start of summer is just 10 days away. Wow. And that means millions of Americans will be hitting the roads as well as the rails, taking to the skies over the long Memorial Day weekend. Just how many of us are expected to leave home next weekend? Hampton Pearson takes a look.
After a harsh winter, millions of Americans will jumpstart the summer travel season with a Memorial Day getaway next weekend. AAA is forecasting a post-recession high, 36 million travelers, the biggest year-over-year jump in more than a decade.
People are sick and tired of hibernating indoors, and they're looking forward to some summer travel fun.
More than 8 out of 10 travelers, an estimated 31 million, will be driving to their destinations. About 80% of all gasoline sales happen at convenience stores nationwide, and a just-released survey finds owner-operators already seeing increased spending over last year and looking ahead to a big summer travel season.
Once you see kids get out of school, whether college or high school, you really see travel pick up.
Memorial Day air travel should top 2.6 million, despite a 6% increase in airline fares from a year ago. A surprise early vacation winner, the cruise ship industry.
The harsh winter appears to be good news for people gaining interest in summertime travel. The cruise industry in particular seems to have benefited with a 6.5% category increase in travelers.
Part of a 1.5 million increase in those taking boats, buses, and trains to get over that winter cabin fever.
We wanted to get to a place where we could just really relax and get some sun. And when we added all those things together, a cruise seemed like a new experience.
I would travel more if the prices came down, certainly, because I do love to travel.
If I want to take me a trip, I'm going to take a trip. And I'll worry about whatever else got to get paid whenever it got to get paid.
With any kind of a break in the weather, forecasters predict the Memorial Day weekend could be the start of one of the biggest summer travel seasons since the end of the recession. For Nightly Business Report, I'm Hampton Pearson in Washington.
I'll be on the road. I hope we have good weather.
I hope so. People want to get away after the winter.
Oh, yes.
We've earned it in the East for sure, and the rest of the country as well.
That's Nightly Business Report for tonight. I'm Susie Garrett. Thanks for watching.
And I'm Tyler Matheson. Thanks from me as well. Have a great weekend, everybody, and we'll hope to see you right back here on Monday evening.
I'm Susie Garrett with a Nightly Business Report news brief. Federal transportation officials slapped General Motors with a $35 million fine, the most allowed by law, for delaying its recall of millions of cars with faulty ignition switches. On Wall Street today, stocks rose, snapping a two-day losing streak, but the major averages still ended down for the week. The Dow rose 44 points, the Nasdaq up 21, the S&P added 7 points. The biggest gainer in the Dow, Verizon, up more than 2% after regulatory filings showed a number of billionaire investors like Warren Buffett increased their stakes in the telecom giant. And AAA is forecasting 36 million travelers will hit the road this Memorial weekend, the biggest year-over-year jump in more than a decade. Be sure to tune in to Nightly Business Report right here on your public television station.